Hey all, welcome to ShareTreck. May the 4th be with you. Today is the 4th of May, 2022. And we're going to have a quick look at the overall market situation, as always. And we're going to try to see what's going to happen today. And I feel good about it today because Fed Powell is going to speak. And after that, I think the markets are going to turn positive. Maybe I'll have to heat my hat, but that's what I feel. And I'll explain why. So let's get started. Let's start off with the first headline. AMD does well on earnings and the stock prices go up post-market. This is a very bullish event for us, and I'm really thrilled because after yesterday's closing bell, AMD crushed Wall Street estimates across the board, and AMD is looking at earnings of $1.13 per share on a revenue of $5.8 billion for the quarter. It's almost $5.9 billion for the quarter. And if you contrast this against the analyst projections of 91 cents per share on earnings of 5.52 billion, this is really fantastic news. And also, AMD's quarterly revenue is up 71% year over year and sits at a record high for the company. This should serve to further mitigate concerns over slowing PC hardware sales in recent months. And in terms of its outlook for the current quarter, AMD is guiding for revenue of between 6.3 billion and 6.7 billion. That would be well above consensus forecast of 6.38 billion. On top of that, the company is raising its full year revenue guidance to 26.3 billion. This would translate to a whooping 60% year on year raise, a significant boost from its previous outlook for a 31% increase. So in my personal opinion, given the fact that we have this tight labor market and inflation situation, which the Fed is trying to bring down, there's a good opportunity for automation related industries to pick up. Companies that create software that can automate a lot of stuff, companies that create firmware and hardware that can help automation in terms of robotics, and also in terms of automated point of sale equipment, so that the labor shortage can be assuaged by increasing automation and therefore less demand for labor. And this is somewhat similar to Cathy Wood's thesis. So I hope that is what is probably happening with AMD's prediction, because AMD is talking about an excellent quarter ahead, so which is a very, very good outlook. So having said that, let us look at the other companies that reported. Airbnb bet the top and bottom line estimates as travel rebound persists, and likewise with Starbucks also, we have seen top revenue forecasts, and they are also upbeat. So all of this indicates that the post-COVID era has started. And as far as Bloomberg market is concerned, they are talking about market Einstein is off the charts even for the day of Fed meeting, and they are looking at the VIX and they are saying that the volatility is pretty high. But they also feel that after Fed Powell speaks, there's a good chance that the market will calm down. Similar to what I mentioned, they are also saying that the expectation is of a 50 basis point hike. And if Fed Powell talks calmly about the future, then things are going to look good for the market, and maybe it will give a temporary respite to the market. And having talked about that, we know that Fed Powell is going to speak today in the afternoon around 2:30, and that's likely to move the markets. Now, I'd like to introduce you to a few charts, and I'm going to put the link in the description below so that you can use this tool for your own analysis. The first chart I have here shows the rate expectations. The market is expecting between 25 basis point to 50 basis point hike for the month of May. So when the announcement happens today, so it won't be any surprise. And that is shown by this huge candle out here with 97.9% probability. And if we select the tab for June, it shows 93.7% probability that there's going to be a 25 to 50 basis point hike. So if Fed Powell talks of 75 basis point hike, then that's going to really spook the markets. Only 6.2% people feel that there's going to be a 75 basis point hike in June. So that's one thing to keep in mind. I've put the link for this website in the description. Please check it out, and you can see where the market expects the inflation to be and where the market expects the interest rates to be. As the expectation of interest rate hikes decrease, that means the inflation decrease is expected respectively. So that's what I would say about that. So talking of earnings, today we are going to look at Moderna, Barrick, CVS Health, Marriott, and of course we're going to look at Uber post-market, and I'm interested in Marathon also post-market, and tomorrow for Shopify. So let us see what these companies have to tell us. But today's highlight event remains Fed Powell's speech. And also we should look at some positive boost coming from AMD, Starbucks, those results that we discussed just in the slide earlier, which are all positive and which are all above market expectations and which paint a very good future outlook. So I think overall the tone of the market is bullish. And today I'm feeling more confident about a bullish outlook. Of course, all the risks are still remaining, but the Fed interest rate hike is also a risk. And when the risk aspect with the Fed interest rate hike gets solidified, like if a 50 basis point is announced, that no longer remains a risk, it becomes a fact. And if Fed Powell says that going ahead, I'm going to do another 50 basis point hike, that makes the market much more calm, because the risk of a 75 basis point hike going forward is now removed. So that's how I would look at the market. So I'm thinking that we are going to be green today on the back of all the great results and outlook, as well as on the potential of Fed interest rate hike being much more clarified and resolving itself further. Of course, the other supply chain issues and other things still remain. And the interview with CEOs has revealed that the CEOs feel that the supply chain will take 2 to 3 years to unravel. And in the meantime, they are migrating from just-in-time inventory and total outsourcing to near sourcing and having inventories on hand. And all of these reforms are going to take a bit of time to reflect in terms of their performance and in terms of their ability to continue production to meet the rising demands. But that's where they are going. So if it's going to take around 2 to 3 years, I'm pretty sure that the automation of most of the things is going to take place, not only in terms of services. We have already seen a lot of automation with telecom for various services. We might see more point of sales being automated with checkout clerks not being needed. And we could also have more of those Amazon types of shops where you just go in and you buy whatever you need and you walk out and you get charged automatically. Uptake for those kind of things will be higher. And also robotics will be much more in demand as labor shortage continues. The main fear for the market participants is that the Fed may not be able to cool off the market quickly enough. What happens if the Fed is not able to cool off the market quickly enough is that we fall into a recession. A recession is caused by demand destruction, basically because everything becomes too expensive to afford, and also demand destruction because interest rates are going up and therefore less cash is available to stimulate demand. All of those things are going to push us down. When employment falls and GDP falls for 2 consecutive quarters, we would be in recession. We already had a fall in the first quarter of GDP. So if the second quarter of GDP also falls, then we would be in a recession. So when there's more automation happening, what that does is it reduces the demand for labor, and therefore the overheated labor market can cool. And at the same time, the automation is going to allow higher level of productivity. Therefore, the supply of goods continues to be in place despite lack of demand for labor. So the two of them together can help us do a soft landing, and that's what I'm expecting. Let us see where it goes. With that, I would like to move on to look at NASDAQ and other indices. Before I start the NASDAQ and other analysis, I want to come up with this headline that I saw just while I was working on this. Moderna blows out first quarter earnings expectations, triples COVID vaccine sale. So this is a bittersweet story for me. I'm really thrilled that they have blown out the first quarter expectations, but they're also expecting around 21 billion of COVID vaccine related revenues going forward. So in their opinion, we are going to continue to need COVID vaccines. So I'm not sure whether this prediction is going to come true. And if it does come true, then what does it mean for our supply chain and other issues and for hospitality industry? So it's kind of putting a big question mark for me. Please let me know what you think by putting your thoughts in the comment box below. I need to think more about this, but I'm just responding to the information as soon as it has come in. I would really be interested in knowing your thoughts about it. With that, let's go and have a look at our indices. So I'm going to start off by looking at the futures. The futures market is looking negative right now. And if I go into the indicators and start with US oil, US oil has gone up, but it is facing a resistance at 107.52. And the MACD is also bullish and the momentum is also raising sharply. So there's a good chance that we'll break this resistance and go up because all the exponential moving averages are providing support. And if I look at the VIX is coming down and it's right now below the 9-day exponential moving average. So that's a superior situation to be in compared to yesterday. Our MACD is also bullish, but tending towards the signal line, and momentum is dropping sharply. So that is a very good sign for the NASDAQ. So now we have two contrary signs. Oil is going up, which is not good for inflation. And in the past, it has always caused problem for NASDAQ. But VIX is going down. So that indicates that volatility is reducing and we are going to have a bullish sign. And of course, this is at the backdrop of the Fed Powell speech expected at around 2:30 today. And if I was to go and look at the 2-year yield, it is raising. So when the yields are raising, money is moving out from technology, growth and risk stocks. And we still have this resistance out here at around 3.032. So it's likely to bounce back from there. But the MACD is turning bullish, and we are in a overbought condition as far as the RSI is concerned. Therefore, there is a likelihood for cooling. So both the resistance and the position of the RSI shows us that 2-year yield should start dropping. And then if we look at our 10-year yield, we have a similar story out there. And our next resistance out here happens to be at 3.057. And our MACD is still bearish out here. And our momentum is not yet at a situation where we can say that the RSI is overbought, but it's very close to that. So I think that these twin factors can help 10-year US yields to start coming down. When the yields start coming down, it's good for the growth stocks and risk stocks, and it's more of a risk-on environment. And if we look at QQQ, which is the proxy for NASDAQ that we are using out here, and it's a real time. So we have resistance at 319.31, which is currently being negotiated. We are at 318.49. And we also have resistance from the 9-day exponential moving average. So that's something that will be encountered immediately after crossing this resistance. Our MACD is bearish, but moving towards the signal line, and momentum is picking up sharply. So these two are some positive signs, but there is going to be high volatility today because we are expecting Fed Powell to speak. And until he speaks and firms up the 50 basis point hike, and until he speaks and has a much more calm statement going forward, I think there's going to be volatility in the market. But after the meeting, I'm expecting things are going to go in the proper direction, and we are going to have a bullish market after Fed Powell's speech. And I've already laid out the reasons why. So with that, let us look at S&P 500, and we can see that we have this. Let me go to our time frame, and I'm going to draw a trend line out here just to show where we are. So if you look at the trend line, we are coming to hit this diagonal line out here. I'm going to mark this as a red line because it has not been broken over. We just have 2 touch points there. We don't have the third touch point, so either we could break above that or we could come below that and form the third touch point and make that a legitimate line of resistance. When we look for clues to the MACD, we can see that the MACD is bullish and the momentum is below average but picking up. So we have a good potential that we may break above this, and it could be a bullish day for us. but it all depends on what Fed Powell is going to say. And if I were to look at Dow Industrial Average to get some clues, again, we have the same kind of a situation here. So we got 3 touch points, and our MACD is absolutely bullish, and momentum is below average, but picking up. So we have a chance of breaking through above here, but we also have resistance from the 20-day exponential moving average. So again, it all comes to what Fed Powell is going to say today. If the market gets spooked by what he's saying, we can firm this resistance and start coming down. Otherwise, we could start moving up and consolidation heading towards the next Fed announcement. So that's how I would look at it. If I look at the clue from put call ratios, you can see that the put call has gone bullish. It has fallen from the peak of 1.32 where we were yesterday, and it has come down here. These are all 2-hour candles. If I go to a 1-day candle, you will see that yesterday we were somewhere up here and we came down. So this is again indicating a bull market. So overall, I think we are looking at a bull market. Let us look at crypto. Bitcoin, I am of the opinion, is totally rudderless right now, and it could take its cues from NASDAQ. If NASDAQ goes up, there's a good chance that Bitcoin will go up, but it has to face this resistance out here, which is this diagonal red line, and that's a long way off. But if you look at gold, gold is falling, and it has got resistance at 1862.43. It has got a falling MACD, which is bearish, and it's got a falling momentum. That also indicates bullish signs for NASDAQ. So overall, I'm bullish about NASDAQ. Well, I have our genomics stocks here, and in true fashion, when I'm bearish, they have been green, and when I've been bullish, they have been red. So it's all red out here, a sea of red. But I think my logic is sound. Let us wait for Fed Powell's speech, and after that we'll see how all these shares react. I'm just going to have a quick look, just out of curiosity, on technology names. Everything is red. So this is the volatility that we were expecting before Fed Powell's speech. But given the fact that we have some really great earnings report and outlook that happened early morning, I suspect that that's going to give us a lot of optimism in the market. And once Fed Powell confirms 50 basis point hike and does talk in a more balanced manner about what he's planning to do ahead, then things should be fine. As long as the next interest rate hike is also within that 50 basis point range, it's fine. But if there is any hint of 75 basis point, then we are going to have a lot of bearishness. So right now we are going to look at volatility happening, and I don't think there is any point doing technical analysis on each of these genomic shares because the situation is going to be fluid and it's going to change very quickly. Yesterday I didn't see any reason for them to be green, and today I don't see any reason for them to be red. So that proves that I'm totally out of sync with the market, or maybe I'm ahead of the markets. We'll find out. Let's regroup tomorrow and take stock of what happened today after Fed Powell's meeting. So with that, I'd like to end this video. Please subscribe in case you haven't done that, and I'll see you tomorrow. Have a great day. Bye for now.